Hi, Larry Gaines, PowerCycleTrading.com. In this video, I want to show you a pairs trade setup for kind of what I call a post-earnings trend trade. And this was on Disney. Now, Disney just had its earnings released today, and they were good. So it's going to be up tomorrow on the open. But a way to play Disney is to do it as a pairs trade. So it's within the communication sector, XLC. As far as the ETF sector, Disney is in that sector. So if you look at this green line here, this is Disney, and you can see how it exploded to the upside. This was back in about April of this past year, 2019. So it exploded to the upside, and look, it just kept going, right? Now, here's the thing. It did come off, but look what came off faster. So you can see XLC, the purple, that came up much faster. So if you had spread this trade where you're long Disney, short XLC, even with Disney coming off right here, it still made money. And then when it turned up, it accelerated to the upside a lot faster than XLC or even SPY. So it's very correlated to XLC, as you'll see in this next slide. So the correlation is very close, 0.66. You know, we like to keep it about 0.65, 0.7. So you can see Disney here is about 0.66 XLC. So that's a very good correlated security to pair with Disney. So this would be looking at Disney long, short XLC. So here's Disney on a daily time frame and a weekly. So it looks really good. You can see how Disney had sold off real hard, came back, sold down. It's been basing at this bottom area here. So it's going to, open up tomorrow. We'll see how much it opens, but you can see on the weekly it still looks good. Now let's compare the two, Disney to XLC on charts, and then I'll show you what the spread chart looks like. So this is Disney on a weekly long-term chart to the left and XLC on the right weekly. Now XLC looks real good here. You can see it's already had a huge move. It's been consolidating, so potentially going to move to the upside. So it'll probably move to the upside here off of Disney being a big chunk of this ETF. But what we're looking at here is that Disney has more potential to catch up and more potential upside based on going to those prior highs and then even exceeding that. So here's a pairs trade idea that you could look at versus just going long Disney or whatever. You could look to go long Disney and then pair it by shorting XLC against it. So this is the spread chart or pairs trade chart of Disney long, XLC short. So you can see it came down here. Currently today at the close, Disney was trading at $81.45 per share above the ETF XLC. Now, tomorrow we'll see where it comes in, but you can see it has a big, huge potential back to the upside. You can see where it topped out here on the long-term chart was 93.50 or so, and so today went out at about, let's call it 82. So if it could get back up here to 93 or even exceed that, 93 and 82, that's going to be $11 per share, or on 100 shares, if you did this 100 by 100, that's $1,100. And the really beauty of spread trading or pairs trading is that if we do have a pullback, some kind of overnight systemic event happens or whatever, we're not just tied for Disney to make money for it to go up by itself. It could go sideways to down, but XLC could go down a lot harder. So, again, it could go, Disney could come off, but we could see the ETF XLC come off a lot harder than Disney, or churn sideways. So there are basically 5 different ways that you could make money off of this pairs trade, being long Disney, short XLC. And if you'd like to learn more about these types of trades, I'll be doing a really good in-depth workshop on pairs trading, spread trading. That'll be this Saturday, the 9th of November. So use the link and sign up and or check it out. And look forward to seeing you hopefully this Saturday. Good luck trading.